But what a lot of people don't realize about gold is that it's money. Gold is liquidity. It's everything else that loses value in relationship to gold. Gold is a better form of money than anything governments have come up with to replace it. And in times like this, where we have inflation that's going to run out of control and central banks that are powerless to rein it in because they've created it and they've created economies that are dependent on it, more and more people, including central banks, are going to be returning to gold. Gold sold off based on the false belief that the Fed was going to win its fight against inflation and bring it back down to 2%. I think now the markets are starting to realize that that's not going to happen when they saw what happened in the United Kingdom, where the head of the Bank of England was just as committed to fighting inflation as Powell. But as soon as it created the beginnings of a financial crisis, they did an about-face and went right back to quantitative easing. I think the same predicament is going to befall the Federal Reserve, and before too long, inflation is going to take a back seat to an even greater crisis, a financial crisis, and a worsening recession, and the Fed is going to go right back to more quantitative easing. There'll be no more rate hikes. In fact, there may be rate cuts. Inflation is going to be nowhere near 2% when they do that. In fact, it's headed closer to 20%. But if you remember, about a year ago, Treasury Secretary Janet Yellen told a reporter not to worry about the size of the national debt because it didn't matter as long as we had low interest rates, because all that mattered was the debt service charges. Well, now interest rates have skyrocketed. I think the yield on a one-year T-bill when Treasury Secretary made that comment was about 0.25%. Now it's 4%. You've got a 16-fold increase in the cost of funding that debt. And remember, that debt keeps having to be rolled over. The government has very short financing on this national debt. So it's already a problem, and it's going to become a much bigger problem. And it's one of the reasons that the Fed is going to chicken out in the fight against inflation, because the U.S. government would be forced to default on that debt if the Fed actually let interest rates rise high enough to bring inflation down to 2%. Remember, we export energy to help pay for all the goods that we import. We already have record trade deficits, and if we couldn't export our energy to pay for our imports, our trade deficits would go even higher, and that would put downward pressure on the dollar, upward pressure on interest rates, and the net effect would be higher consumer prices. Yes, gas might be a little cheaper, but everything else would be more expensive, and it would be a net loss for the country.